Hi friends, welcome to Konexio Technical Insight. I am Rahul Randeria and I will be conducting today's show. Today we would be discussing regarding the trends, the setups, the technical indicators, the candlestick patterns, the derivative data of Nifty, Bank Nifty, as well as the different asset classes. Now first of all, a general disclaimer. This video is only for education purpose. Please consult your financial advisor before investing and trading. Now friends, let us discuss what we have mentioned in our last video. In our last video, we have mentioned that the undertone of the market is bullish. The charts are showing strength. Any dips should be used as a buying opportunity. Markets opened on a positive note. Initially, it gave some sort of cool off, and after that, it started rallying uh, throughout the week and ended on a positive note for on the weekly basis. So overall, the weekly closing remains to be very strong, and it indicates that further from these levels, the trend might remain positive, but again, the charts were highly sharp in the last couple of trading sessions, so any cool off cannot be ruled out. So definitely, the trends remains to be positive, and charts were very strong on the closing basis. So now, friends, let us go to the Nifty daily charts, and we'll try to figure out what could be the trend for the next week. Nifty has been moving in this particular expanding triangle, and it has closed way above its lifetime high. And this is a positive signal. You can see on the RSI also. RSI is also just trading near the overbought territory, but still it is in a comfortable zone. But looking at the Thursday's candle, we feel that a slight cool off cannot be ruled out, and that should be used as a buying opportunity for the next week. Rest of the charts remains to be positive. Moving averages are also positive. You can clearly see. So overall, the charts are strong, and we feel that any dips should be used as a buying opportunity for the next week. Now, friends, let us discuss the important support and resistance level for the next week. First support is around 22,794. Below that, the second support is around 22,584, and third support is around 22,483. On the upside, the first resistance is around 23,168. Second resistance is around 23,323, and third resistance is around 23,445. These are the important and crucial supports and resistance level in Nifty. One should follow these levels, and one should have a buy on dip strategy for the next week. Now, friends, let us discuss the derivative data of Nifty for the next week. In Bank Nifty, in Nifty, you can see that action was seen in 23,000 calls, 23,100 calls, 23,200, and 23,300 calls. Now here you can see the option premium are slightly negative. Implied volatility is between 12.47 and 13.45. In certain strike prices, there has been a rise in the volume, rise in the open interest, which is a strong sign. But a slightly drop in the option premium is clearly indicating that we might see some sort of cool off or some sort of profit booking, because we have seen a sharp rally in the last couple of trading sessions. So a profit booking from these levels cannot be ruled out, but that could be a healthy one for the larger degree trend, and that should be used as a buying opportunity. Now on immediate basis, 23,000 could act as an immediate resistance. If Nifty closes about 23,000 mark, then there are chances that Nifty might scale towards the level of 23,300 and almost 23,400 in the coming trading sessions. So looking at this particular data, we feel that a cool off cannot be ruled out, but that should be used as a buying opportunity. Now let us discuss Nifty put data. In Nifty put, you can clearly see there has been a drop in the option premium. That means the smart money is into writing the puts. You can clearly see the action. The implied volatility is between 12.07 and 13.78. There has been a rise in the open interest, rise in the volumes, certain strike prices. On immediate basis, you can see 22,900 could act as an immediate support. If Nifty breaks those levels, then there are chances then it can see some sort of cool off towards the level of or between 22,800 and 22,750, and that should be the area between 22,800 to 22,750 to again create long positions for positional call. But looking at the option premium, we feel that smart money is already into writing the puts, and that is a very good sign, a bullish sign for the markets. But looking at the sharp rise in the markets, a cool off cannot be ruled out. So overall, Nifty derivative data and Nifty chart seems to be positive, and any dips should be used as a buying opportunity. Now, friends, let us see the Bank Nifty daily charts, and we'll try to figure out what could be the trend for the next week. Let me go to the Bank Nifty daily charts. Now, you can clearly see Bank Nifty daily charts has been moving in this particular rising channel, making higher tops, higher bottom. Currently, it is on the midway of this rising channel, and it has potential to test the upward resistance trend line, which is almost about 50,000 mark in the coming trading sessions, maybe next 10 to 15 trading sessions. So overall, chart seems to be positive. Now RSI, you can clearly see it is also in the positive zone with positive signals. So overall, the trend remains to be strong at this juncture, and any cool off cannot be ruled out, but that should be used as a buying opportunity. So looking at the charts, now let us discuss Bank Nifty supports and resistance level for the next week. The first support in the Bank Nifty is around 48,644. Below that, the second support is around 48,259. And below that, the third support is around 47,781. Whereas on the upside, the first resistance is around 49,252. Second resistance is around 49,607. And third resistance is around 49,974. These are the crucial supports and resistance level in Bank Nifty for the next week. Traders should watch out this level closely and trade accordingly, looking at the supports and resistance level. Now, friends, let us discuss the derivative data of Bank Nifty calls. In Bank Nifty calls, the action was seen in 49,000 calls, then 49,500 calls, and 50,000 calls. The option premium are slightly positive and slightly flat. Implied volatility is slightly higher between 14.33 and 14.56. There has been a rise in the volume and open interest in particular strike prices. On immediate basis, 49,000 could act as an immediate resistance. If Bank Nifty closes above those levels, then it can scale up to 49,500 to 49,900 to 50,000 mark in the coming trading sessions. So overall, the data remains to be positive at this juncture. Now, friends, let us discuss the Bank Nifty put data. In Bank Nifty put data, we can clearly see there has been a significant drop in option premium. That means the smart traders or smart money is already into writing the puts. That means it is a very bullish sign for the markets. The action was seen in 48,800 puts, 48,500 puts, and 48,000 puts. On immediate basis, 48,800 could act as a strong support zone. If Bank Nifty closes below those levels, then there are chances that it can drift down to the levels of 48,500 mark. Now there is a strong concentration of open interest as well as the volumes. So 48,500 mark would be the ideal level where one should go long if there is some sort of cool off in the next week, and that should be used as a buying opportunity. So looking at this particular data, the overall trend remains to be positive. Now if we combine or club all the data of charts and derivative data of Nifty and Bank Nifty, the view remains to be buy on dips for the next week. Now again, I would like to say that next week is monthly expiry, so high volatility could be on the cards. Most of the action could be seen in the rolling over of the position from current series to the next month series. So it could be a highly bumpy ride, at least for the next week till Thursday. So for that reason, our buy on dips should be the strategy. and one should trade with strict stop losses. Now, friends, let us come to the final segment of our show, which is positional call. I've identified one stock from the sugar sector. The name of the stock is Balrampurchini. So straight away, let us go to the uh, daily charts of Balrampurchini. The stock has shown some sort of strength at these levels, and the trend is positive in the stocks, and stock has potential to give a decent return from these levels. Now you can clearly see the stock has been moving into this particular falling channel, and you can clearly see the stock is on a verge of a breakout. On Friday, you can see there was an engulfing bullish pattern. Strong has what we call as managed to close above its 100-day moving average, and it is about to close above its 200-day moving average. The volume was on the rise. The RSI is on with a positive signal. So definitely the stock has potential to give a decent return in the coming months. Currently the stock is quoting around 388. So positional investors, positional traders, swing traders, short-term investors, long-term investors can buy this stock on dips to 380 for an upside target of 425 in short to medium term. Short to medium term means, for me at least, minimum investment horizon would be for next 2 to 3 months. So definitely the stock has potential to give a decent return in the next 2 to 3 months. So investors can buy the stock on dips to 380 for an upside target of 425 in short to medium term. So one can keep Balrampurchini on radar for investment perspective. So friends, now let us conclude the show. Any suggestion you can give in the comment box, and have a nice trading week. Thank you.